Hey, what's up traders? This is Taylor and this is your free video for Friday the 28th of October. Another week in the books, and as always, hope you guys had a good week. Hope you got a little bit better at your craft, and ideally, you put a little bit of cashola in your pocket. But we'll do a quick recap here, guys, and we'll lay out my game plan for the week ahead. So obviously, a lot going on this week. We had big tech earnings. Facebook, aka Meta World Peace. We had Amazon, Apple, Google, and Microsoft. So of course, Meta opens up post-earnings with a cool, casual 20% gap to the downside. So Facebook gets spanked. Microsoft here, pretty good bounce today, but they got hit after earnings. Big Google got a big thumping. Again, a little bounce here today. And then last night was the big fellas. The biggest of the bunch, Amazon. At one point last night, down 20%. Jeffrey Bezos down a couple billion this morning. We opened up down about 10, and it looks like we're going to finish here down about 7-ish. So obviously a pretty big hit there for Amazon, but the one bright spot as far as tech earnings was the big Apple. Apple up just about 7.5%, 8% on the day. So we got through big earnings, and my biggest question now is, what we've seen here this week when it comes to the indices and when it comes to what I would call the pieces of the puzzle, the VIX, the dollar, and the HYG, what we're seeing is a lot of improvements in the structure in the short term that lead me to believe maybe for a few weeks here, we could be looking to buy the dip and try to see this market into higher prices. So before we jump into that progress, I do think it's important to take a quick look here at the bigger picture, which, for now, guys, hasn't changed. I still view the monthly squeeze with the first negative histogram since 2008 under the monthly 21 EMA. I still look at that as a bit of a problem. If they can't cancel out the issues here, in the event on the next leg to the downside we take out the monthly 50, at that point I think you see the market trade much, much lower. So that problem is still lurking in the background. And as far as the weekly chart here, again, really big move this week. You do have the S&Ps right underneath that weekly 21 EMA. So keep in mind, that could be a level of resistance. But more importantly, guys, check this out. Just to give you a sense of what's possible, and I know Sam covered this in last week's video, but in terms of the ebbs and flows of a trend, all the downtrend really is a series of lower lows and lower highs. So you put in a high around 45.50. We put in a low down here at 36.70. This previous rally gives you a lower low around 4,300. And then, of course, a few weeks ago, we put in a lower low right down there at, we'll call it 3,500. So to continue this pattern of lower lows and lower highs, from here, technically, the SPX could rally all the way up towards that weekly 21 EMA, right around 4,200, and if we got there and stalled out and rolled over, that would continue this pattern of lower lows and lower highs. So from a structure perspective, it's not to say we're going to rally to 4,200, but the point being, we could see a rally of that size. And the pattern here on the weekly chart still remains the same. So probably something that we'll cross that path when we get there. But for what it's worth, if we get to the weekly 50, that, my friends, is where we short the bad boy. So keep in mind, bigger picture hasn't changed, but what has finally changed this week is the structure on these lower time frames. So before we jump into the market, we'll take a look here at the pieces of the puzzle. So for starters, the volatility index, this all works in the favor of the bulls for now. We take out the 21 EMA, we take out the 50, we got a daily squeeze firing short, and we have 1 hour, 30, 15, and 5-minute sell signals here on the Big 3 indicator. So as long as the VIX is fading on down, it's a positive there for the bulls. Next up, guys, is HYG, which really came to life this week. Lots of progress. Back above the 21 EMA, back above previous support around $73, back above the 50. You've got a daily squeeze with the first histogram since the August rally. The first positive histogram, rather. And our lower time frames are going into an uptrend. 1 hour, 30-minute, 15-minute, 5-minute buy signals on the Big 3 indicator. So lots of progress from the jump bonds this week. a good thing for the bullskis. And then the last piece of the puzzle is that dirty dollar. And some progress here as far as the bulls are concerned as well. Under the 21, under the 50. We are fresh out of buy signals, and the histogram here in that daily squeeze does begin to roll short. So I think the question still remains, does this daily squeeze fire short, or eventually it turns a corner and goes on to fire long? Next couple of weeks here, guys, in the event that daily squeeze in the dollar, the Dirty Dixie fires short, it's just further evidence in the short term. We want to be looking to buy the dips in the S&Ps and the QQQs. So pieces of the puzzle, they've improved. And then, of course, the structure of the market. All kinds of improvements here as we grind into the close. If you guys open your window right now and you listen closely, that sound you hear in the distance, that's the shorts squealing. Squealing all the way into the weekend. Alright, but as far as the structure here, again, the monthly squeeze is still a bit sketchy. The weekly chart still pretty beat up. From a daily down to a 5-minute, that's where the progress has been made. And more importantly, that's where they're keeping the progress. So the S&P 500, positive histogram in the squeeze that, as of today, fires to the upside. So that's something we haven't seen since the August rally. And coming into this week, that was kind of the question. Does this turn out to be something like the September pop, where things look promising for a few days and then it craps the bed? Or does this all turn into a August rally? A little bit of sustainable action, one could say. For now, we're seeing a lot of evidence this could be a bit more like that August rally. So S&Ps, firing a daily squeeze long, back above the 21 EMA, ripping through the 50, and we've canceled out every sell signal, including the sell signal here on the daily chart. You'll notice there's no more red arrow. Canceled out the sell signals, and now our 1 hour, our 30-minute, our 15, and the 5-minute, they got that buy signal there on the big 3 indicator, which in plain English means trend, structure, momentum is bullish on those time frames. Nice progress here to the hourly chart. Nice progress to the 2 hour, and check out the 195. The first positive moving average cross with the 21 EMA back above the 50 on the 195-minute chart since that August rally. So they've made progress. The key moving forward is whether or not they can keep the progress. How does the market behave on the dip? And moving forward here, guys, so long as these dips find support, a good example here is the hourly chart. You get a big old rip. We get a little bit too cooked. But on that pullback, the structure remains bullish. If anything, the structure gets better as we start pumping out the hourly buy signal here. But that's the key for next week. It's a little bit hot here. S&P's up 2.5%. The Qs are up 3%. I'm probably going to wait to buy it on a dip. But I think when you look at the volatility index, the dollar, HYG, and all these pretty lower time frame buy signals here in the S&Ps, I think for now we got a lot of things to work with as far as looking to buy the dip. Quick look here at the QQQ, and then I'll give you guys a couple of setups into the weekend. The Qs, just all things being equal, very strong here. Microsoft gets spanked, Google goes down, Amazon, and here's the Qs. They actually improved today. So if you told me last night that Amazon was going to be down 20% after hours, and that we would finish today with the QQQ looking better, I would have said, pass me a little sip of whatever you're drinking. But here it is, right? Above the 21 EMA, cancels out the daily sell signal you had yesterday. So that's where it improves today. 15-minute, 5-minute buy signal. So the Q-tips improve. Quick look here at the IWM, which is a beast. Ripping through the 50. And mind you guys, we got a lot of daily squeezes here. As far as the IWM goes, daily squeeze hasn't even fired to the upside just yet. And then last but not least, the leadership from this week, the Dow. So you go across the board, you check out the financial sector, you look at the healthcare sector, you look at things like XLK, you look at your semiconductors even. Lots of progress this week, guys. So until proven wrong, I'm coming into next week looking to buy the dips. And where I'm proven wrong is when, let me show you guys my favorite layout here. Because my whole focus right now is the ground up. when you got problems with your structure and your trend from the top down, the only way we can rally against that is to rebuild the structure and get back into trend from the ground up. So all I'm looking for as far as that goes is a combination of that positive moving average cross, 21 EMA above the 50 SMA, and then if we can get some buy signals, well, that's the extra sauce right there. But as far as the SPX, guys, we got that positive cross, right, and my candles go blue and the 21 crosses above the 50. We've got the positive cross on every time frame, except the daily chart. So in terms of where do I think this all starts to fall apart, pretty much if we lose that positive cross on all these lower time frames. So at any point next week, the 5-minute goes negative, the 15-minute goes negative, the hourly falls apart, and they take this back under 3,700. Well, then I think you want to be a little bit easy about buying the dip. But in the absence of that kind of flush, I think for now we got a little bit of a green light. So as far as a few charts here, guys, and the major thing to keep in mind heading into next week, pick your spots wisely. So for conversation's sake, conversation amongst friends, if the SPX is going to rally to, say, 4,000 from here, there's probably going to be a couple of dips along the way. And while those dips can feel a little bit scary, so to say, what those dips actually do is give you an opportunity to jump into this move while locking in a really good risk-reward. So one good example is, I've been doing a lot of put credit spreads here on the futures as of late. A couple of days ago, S&P futures are rebuilding the structure. You got a little dip here into the 4-hour 21 EMA. That's your opportunity to dip into support, to sell that put credit spread or buy those calls and lock in a good risk versus reward. Think in terms of the options pricing. On that little dip, those puts gain premium, so there's more meat on the bones for a put credit spread, and any calls you want to buy get a little bit cheaper. So one trade I did last week, or this week rather, on that dip, was a put credit spread here on the S&P futures. And because I sold that put credit spread into the dip, right, I'm selling those puts as they're gaining premium. As soon as she turns the corner and keeps it pumping, pretty quickly, you got some nice premium coming in. So that is the thought process for next week. Get a dip, sell some put credit spreads, and ride that donkey all the way into the sunset. So as far as a few charts here, guys, one name that we're really digging right now, we took a position here in my mastery yesterday, General Mills. I'll call it picture perfect. Daily squeeze in an uptrend, 2-hour, 1-hour, 30-minute, 15-minute buy signals. I wouldn't chase it up here. We're buying it yesterday around $79. But I think next week, a dip to the hourly 21 EMA, I think you look at that as a pretty good gift. We're looking for a push towards 83-ish. So that's a beautiful setup. Another one we got here, guys, that we took profits on this afternoon in both the options room and my mastery is NVIDIA. So for NVIDIA here, again, the whole theme is we're rebuilding structure from the ground up. So earlier in the week, we get our first close back above that daily 21 EMA. And at the same time, we're rebuilding the trend structure on the lower time frames. Positive cross on the 1-hour. The dips begin to hold. So we took a put credit spread. We took profits there today. I think you can see NVIDIA. And as always, guys, market willing. Don't ever marry any idea. So if the S&P's gap down 10% on Monday, that sounds a bit extreme. If the S&P's gap down 5% on Monday, we're probably not looking to get long. So structure first. But as long as the structure of the market behaves, I think in the short term, you could see NVIDIA up towards 150-ish. So what I'm looking for next week is an opportunity to reload. I think any dip here into the hourly 21 EMA, probably going to look to sell another put credit spread. So we like the S&Ps on the dip. We like NVIDIA. We like General Mills. And the last one I got for you guys here today is the good old Tesla. So I don't think Tesla's quite ready just yet. But here's what I think you want to look for next week. Where the progress has been made up to this point is on those lower time frames. So the 1-hour chart rebuilds the structure with a positive cross. The 30-minute chart rebuilds the structure with a positive cross. If Tesla can continue to rebuild those lower time frames and then close above that daily 21 EMA, then at that point, very much like Nvidia, at a minimum, that should open the door for a push up towards +1 ATR on the daily chart. And you can see Nvidia's giving you a little bit more here today. So for Tesla, that'd be a push towards 245, 250. But I think you hold off on that trade until it looks like we're going to get that official close back above the daily 21. But there you have it, guys. The theme of the week. Progress was made and progress was kept. If that theme continues for the next few weeks here, I do think we got some more upside to come. So keep in mind, bigger picture, not too much has changed. And structurally, that weekly downtrend continues all the way up towards 4,200. At 4,200, we continue to put in lower lows and lower highs. So I tell you what, in a perfect world, we get a few more weeks of upside, we wipe the floor clean with it, and then maybe somewhere up here, we parlay those profits into some short positions. And as always, guys, if things fall apart on Monday, we are ready to adjust the game plan. But that is all I got for you guys today. Hope you had a good weekend, and as always, make sure you take a little bit of time this weekend to take a step back from the screens, spend some time with your family, try to give your dog, I think, a minimum of 3 or 4 walks is fair. But then I think you want to put a little bit of time into your craft. If you had any trades this week that worked, go back and study them, review them, take notes. If you had trades that didn't work, go back and study them and take notes. I've had a really good week on my end, but there were a few trades that didn't work out. One example here is Dick's Sporting Goods. We had some long trades in Dick's Sporting Goods, and they got shaken out today. So the one potential lesson for me is I might want to start adding the hourly 200 SMA to my charts. A buddy of mine reached out to me today. I won't tell you his name. Let's just say his name rhymes with Sham Sames. And he said, hey man, you might want to throw the hourly 200 on the chart. A lot of times during this choppiness, it's kind of the ultimate over-under. So not that we play the game of coulda, shoulda, but in hindsight, Dick's pulled back to the hourly 200 and held. We had a trade in LNG that we took off for a small loss. That pulled back to the hourly 200. So the point being, it's easy enough to think about your winning trades. I can think about my S&P put credit spreads. I can think about the Nvidia trades, General Mills. It's easy to think about the trades that work. Take a little bit of time this weekend, review the losing trades. What are some mistakes you might have made? What might have you not been seeing? More importantly, what can you do moving forward to get 0.1% better? That is the goal every week, guys. But I'll let you go here. Hope you have a good weekend. If you haven't already, go on ahead and hit the like and subscribe button. And leave us a comment down below, guys. It really helps with the interaction. Here's what I'm going to do. Comment down below your dream car. Let me know your dream car. I won't judge you. Personally, oh boy. Lamborghini Aventador SVJ Roadster, C7 Corvette ZR1, C6 Corvette ZR1, C8 Corvette Z06. The list goes on and on. So let me know in the comments what your dream car is, and then next week we'll show up, find ourselves a few good trades, and get a little bit closer to that dream car purchase. Have a great weekend, guys. I'll talk to you soon. What's up, traders? This is Taylor from Simpler Trading. I wanted to thank you for watching our video, and if you liked the video, go on ahead and comment down below, hit that like button, and make sure you're subscribed and hit that bell icon to get a notification anytime we upload our next video. And of course, if you want to watch us trade live in real time with our own money, check us out at simplertrading.com. Until then, trade safe, and I'll catch you in the next video.